So good evening, champions. Welcome to Officers Adda 247. I hope everybody is doing well and is progressing in their preparation journey. The exam dates are out. IE IFS exam will be held on 4th of May. And to all of you, there is a simple message from the entire team that you must start your preparation on a very, very serious note if in case you have not started till now, because time is running out. Effectively, we have only 80 to 90 days if we leave aside the revision time required for revision, and some professional obligations in the office. So now is the time when you should push the throttle and go in full swing. Preparation should be or must be in the full swing. So on that note, I again welcome all of you in this particular video, in this particular session of IE IFS. As you know that in these sessions we provide you with the relevant concepts, with the relevant topics, which will give you an external motivation, external push from my side or from our side, which will ultimately help you to begin the chapter. The initial inhibitions will be vanishing once you attend these sessions. Due to the paucity of time, we cannot complete the chapter as such here on YT, YouTube. But if you feel that you are correlating with the faculties which are providing various subjects, lectures, topics, subtopics, then you must feel free to ask us any doubt you have and must consider enrolling in the courses which we offer. Now, why in the start of the session I am telling you this? Because we do not have time. Now, if you start to prepare on your own, the 4 bulky components of JAIIB exam will take you down. The motivation will go down if you are a beginner. If you do not know anything, you have not appeared in the exam in the previous cycles, you do not know about the syllabus, you will be bogged down by the vast syllabus. How to prepare, when to start, what to do, what are the steps involved for preparation, when I should go with the mock tests, when should I prepare notes. All these things, they matter a lot when the exam is very, very near. Effectively 3 months are there, but you would also vouch for this, that these 3 months will have various things going on. If you have just started the preparation, you will be jotting down the important points, taking down the important notes, reading them, and after that you will have audits. You have the annual closing in the banks. There your time will be taken up. So my advice would be, if you are just a beginner or you feel that there is some mismatch between the level of preparation you desired versus the actual level of preparation, then do consider joining the course, the offerings which we have, or for that matter, contacting us in the YouTube platform via comment section. So if you are live, you can ask me any question regarding the preparation, regarding the planners, regarding how you should approach this exam. Or if you are watching the recorded format, then do not forget to comment below in the comment section. So let's start today's unit. More of a Guru Gyan, but yes, that is also necessary sometimes to lift up the motivation of all of you. So module C, we are targeting, the chapter name is NBFCs, non-banking financial companies. Unit number is 25th. After this unit, we'll be having only 20 more units. So you can see that slowly, gradually, the number of units completed in champion series, they are more than the units remaining. That proves that exam is coming. Okay, so let's talk about NBFCs, how we will gradually dwell deep into the concepts of NBFCs. Let's see the agenda. First of all, we will see that what do we mean by NBFC, what is the definition of NBFC, and the best definitions for the financial institutions, for the financial companies, come from understanding their roles, understanding their functions. So we will try to correlate the functions of NBFCs and what all functions they cannot perform. Based on that, we will understand that what does one NBFC do. Then evolution of NBFCs in India, how the NBFCs have evolved as companies, as organization, as entities in India. Were they present before independence or after independence? The need for NBFC was felt by the government of India. We will see that. Role of NBFCs in promoting the inclusive growth in India. Inclusive growth has two major things. Targeting the various sectors of economy first. Secondly, targeting the various segments of society. Okay, so these two parameters you must have in your mind whenever the word is what? Inclusive growth. The growth which involves every citizen is involved in that growth, be it in the production aspect or the consumption aspect of economics, or for that matter, every sector of economy is involved in the growth story, in the economic growth story, plus every segment of society, starting from rural society till the metropolitan society. Every society is involved in the growth story. We will see how NBFCs pan out there. Who is the regulator of NBFC? First thing first, the regulator, the ultimate regulator will be RBI, hands down, no doubt in that. But there are certain companies who are involved in certain functions like insurance, like some companies which are falling under the Company Act. They will be regulated by various regulators. Insurance companies, some regulatory mechanism for them will be defined by IRDAI, the insurance regulator of our country. For the companies involved in, let's say, MFs, mutual funds, regulatory mechanism will be defined by SEBI. So varying regulators will be there for NBFCs, but the ultimate regulator is the RBI. Scale-based regulation, SBR, a revised regulatory framework for NBFCs. After COVID in 2021, this was a framework provided by RBI on the recommendation of Government of India, that we as a country must focus very seriously on NBFCs. We should not say that okay, NBFCs are doing their bit, let them grow on their own. No, you must set one timeline that by the year 2026, by the year 2027, you must have this much of asset size. Your NPA level must be this. The definition of NPA will be this. We will see all these things, don't worry. So basic idea is the most important part of these 5 units, these 5 topics, the most important part is this only, SBR, scale-based regulation, a framework developed by RBI in 2021. So let's start with the first topic. What is a non-banking financial company? Non-banking. So if you break down the words, you will see that non-banking means what? A particular company is involved in something which banks are doing or not doing. A particular company is involved in those activities which normally banks do not do. Or a particular company is involved in the activity which the banks are doing, but not the primary objective of lending is being met. How? Banks are there. The first thing which reminds us of bank is the money, the flow of money. That we want what? We want your demand deposits. So demand deposits are absent in NBFCs. That is why the primary goal of banking is not being met by these companies. And from there, this word non-banking has been added to the financial company. Okay, now what is a financial company? As the name suggests, it's a company. So when it was formed, when the concept of financial company started, NBFC started, it was defined where? What's the guess? In the Companies Act. So from here the story begins. NBFC is a company and has the principal business of receiving the deposits. Fine, receiving the deposits. That does not mean that it will give you demand deposit. NBFC are not the part of payment and settlement system. No demand deposit. And they cannot issue the checks. Checks will be issued in which case? When you can demand the money in real time. Drawn on itself and cannot borrow from RBI. This is very, very important. It cannot borrow from RBI. All the commercial banks which are involved in the business activities in our country, they can borrow from RBI. We have seen that in the previous modules, in the previous units, wherein bank rate, MSF, all these things will make a correlation between the lending by RBI or lending for RBI. Banks can do that, but not NBFC. They cannot borrow funds from RBI. Very, very important, I would say. Okay, a very important and valid point also. RBI, Reserve Bank of India, will give money to the banks only, the entities who are there for banking activities, only the banking activities. Okay, now definition. When we come to this bulky definition, although I could have cut short this particular definition, but deliberately I have kept it so that you can understand what are the functions through definition. What are the functions of your NBFCs through this definition? How? The first line will describe the definition. After that, they are functions only. Let's see. A company registered under Companies Act. Okay, that is the prime definition for a financial company. Plus, if you add the finance part here, involved in financial activities. A company involved in financial activities and registered under Companies Act is known as financial company. Fine. Now comes the function of this non-banking financial company. Engaged in the particular entity, NBFC is engaged in business of loans and advances, acquisition of shares, bonds, securities issued by the government or local authorities, or other marketable securities, leasing, hiring, purchasing, forfeiting, factoring, all these things, insurance, chit, but all those activities which it cannot perform or it does not perform, they include the activities like agricultural and industrial activities. If a particular company, financial company, is solely based in the industrial sector for the agricultural activities, you will say that okay, it cannot become a NBFC. The regulatory framework for NBFCs won't be applicable on it. The push from RBI which it gives to the NBFCs is not applicable here. Okay, so industrial, agricultural activity, purchase or sale of any goods other than the securities, or providing any services and sale, purchase, construction of immovable property, not involved in immovable property. Now just tell me, what is the primary function of a bank? Primary function, lending is the primary function, and the asset creation for the customers, it is a part of the lending activity. Now what do you think? One NBFC who is not involved or prohibited to have a business activity in the immovable property, in the land, in the business sector, do you think that they will fulfill the importance of banks being the backbone of the economic growth, of the economic activities of the Indian economy? Answer is clearly no. Fine. So basically the company registered with Companies Act, under the Companies Act, engaged in business of loans and advances, acquisition of share, bond, securities issued by government, local authority, or other marketable securities, leasing, hiring, purchasing, factoring, forfeiting, insurance, chit, all these are being the functions of NBFCs. And what all functions are prohibited? If a particular company is involved only in agricultural activity or only in the business activity or industrial units. Fine. Okay. Now let's move on to the evolution of NBFCs in India. How the NBFCs evolved. After independence, if you have studied the 5-year plans in detail, at least the important points, you must have realized that government of India was very keen to develop the agricultural sector, the primary sector. And the development of the sector cannot happen if you leave aside one component which will drive the economic growth of that sector. Lending activities or the banking activities is one of the sector which will drive growth of any sector, be it primary, secondary or tertiary. So back in 1960s, when the Planning Commission was thinking about the rural economy, the agrarian economy, this thought came in their mind that we must have a company which is not a bank. Okay, bank involves n number of regulations. Let's have a company at a very small scale which can provide some banking activities and the regulation is not that much. Okay, so from there the NBFCs were born. They commenced operations in a small way in 1960s as the alternative to the banks. Their role was limited and they invited FDs and worked out leasing deals, leasing, finance, the leasing, hiring, purchasing, all these activities. Initially, the Companies Act regulated them, but there was a call for separate regulatory mechanism. Now, when this separate regulatory mechanism was instilled in the NBFCs, it was done by the amendment of your RBI Act, and Chapter 3B was included in this RBI Act. Now, this assigned RBI with the limited authorities to regulate the deposit-taking companies. There are investment companies, credit companies, factoring companies, you can say, microfinancial institutions, n number of companies are there which can be clubbed together as NBFCs. Back in 1960s, or you can say late 1960s, when this Chapter 3B was introduced in the RBI Act, the major power which RBI got was this. Now the RBI can regulate the deposit taking companies, the companies who are taking the deposits. Okay. In 1970s, more regulatory powers were given to RBI. RBI directed that hire purchase and leasing companies could accept the deposits up to their net owned fund. There are two types of funds which define the bank's size, asset size and the NOFs. So according to their net owned funds, as per the recommendations of James S. Raj Study Group 1975, hire purchase and leasing companies could accept the deposits up to what? NOF. This is very, very important point, everybody. James S. Raj. This particular study group is very, very important. Name can be directly asked in the exam. Note it down in your notes. Fine. 1975 is the time where this committee gave the recommendations. Okay, and what was the recommendation? Hire purchase and leasing companies now can accept the deposits up to what? Their net owned funds. Which two types of companies? Hire purchasing, the companies involved in hiring and purchasing, and the leasing companies, companies involved in leasing activities. NBFCs had to maintain liquid assets as unencumbered approved G6. They can have their liquid assets, or it was mandatory only that they must maintain their liquid assets in the unencumbered form, and that form would be in relation with the government securities. Okay, so these 2 points are very, very important. You must remember from this slide. What you need to remember is Chapter 3B. You need to remember James S. Raj Study Group, what was the recommendation, and you must remember the unencumbered approved G6. Now let's move on to an era of 1980s, 1990s, more or less driven by the economic slump of our country. The fiscal deficit was again on the negative side in the sense the projection which we wanted, it was not achieved at all, not achieved till now also. Now as the budget will be out in few days, next week, we will be able to see the discussion again going on for the fiscal deficit. Okay, since 1980s only this discussion is happening. Still we do not have any solution, permanent solution. Secondly, the balance of payment of our country was again tilted towards the imports. Our country's imports were way higher than the exports we were doing. So these two things, along with the inflation rate, the rate of unemployment, it led to financial crisis, economic crisis in our country, which ultimately led to the economic reforms in 1990s. Okay, so we are talking about that era. Why I'm telling you this? So that you can correlate that what was going on during that time in our country. So 1980s till 1990s, let's see what was happening. The number of NBFCs, initially it was 7,000 in 1981, which was ultimately multiplied 4 times in 1992. So within a time span of 10 to 11 years, 4 times growth was registered in the number of NBFCs in our country, which made RBI feel that there is a need for a regulator for this particular industry of the NBFCs. Okay, now what is the most important committee during this era, during this time? It is AC Shah committee. AC Shah committee is very, very important, very, very relevant, which was formed by RBI to suggest certain measures for, you can say, regulation of the industry, regulation of the NBFCs, and certain recommendations were also made, out of which the most important was this: compulsory registration to the prudential norms. Now what are these prudential norms? What is the asset quality? What is the CAR, capital adequacy? Do you have CAR or not? What all measures your company, your organization, your entity is having to implement the RBI guidelines, RBI regulations. All these things will be clubbed together to form the prudential norms. So level of seriousness towards regulation started after the recommendation of Mr. AC Shah committee. Now let's move on to 1997 era, marked by the Asian financial crisis. It wiped out mostly the important benefits which we got after the economic reforms. The Asian financial crisis happened. Why? Because of the credit bubble created in Thailand and ultimately spread to the entire Southeast Asia. Now when it spread to the Southeast Asia, there was one finding made by various economists across the globe that okay, credit bubble was there, it was there, but the major issue with that credit bubble was that it was not having any regulatory framework. The credit was being distributed among people, among individuals, corporates, like anything. You do not need any compliance when you are disbursing loans. So you can understand the gravity of situation. According to the economists sitting in the Southeast Asia, the economy was in boom. The supply of money was huge. Nobody was inhibiting their urge to invest, but ultimately it landed, or it culminated into Asian financial crisis. So during that era, especially in January 1997, there was major changes in RBI Act, especially the chapters 3B, 3C and 5, seeking to put in place a complete regulatory and supervisory structure. Okay, so RBI learnt from the story of Asian financial crisis that we must have a robust system of regulatory mechanisms which would protect the interest of NBFCs, customers, and ensure their smooth functioning. In August 2016, government agreed for the FDI under automatic route for regulatory NBFCs. Now, not related with the entire evolution, but yes, this is an important point that now today we have the automatic route for FDIs in NBFCs. You must remember this fact. Fine. All of you who are watching live, if you have any doubt, you can just ask me. Okay, any doubt, guys? You can just ask me. Okay. Now let's see what is the role of NBFCs in the inclusive growth of India. How the inclusive growth story will be written by the NBFCs, specifically in India. Inclusive growth, I just told you two things. One, a growth story which will be written by the entire sectors of economy, clubbed with entire segments of the society. When we talk about the metropolitan cities, when we talk about the urban areas, maximum government policies are redirected towards their development. But what about the rural areas or semi-urban areas? They are often neglected. So inclusive growth means that you must uplift their standard of living for the rural areas and the semi-urban areas, and along with that you must have certain developmental activities in every field, be it sanitation, health, education, or for that matter banking also. Fine. So NBFCs play an important role in guiding the customers, guiding the individuals residing in those areas to become banked, to adapt to the banking industry. Okay, the norms, the sense of savings, the liquidity, all these things will be learnt by the individuals residing in rural areas and semi-urban areas if we have a robust framework of NBFCs, robust network of NBFCs, fine. So first of all, it caters to the lowest strata of society. They provide, NBFCs provide strength of reach, proximity to the customers, availability to understand their demand. In economics, if you know the demand, the pulse of the customers, you will have a flourishing business, hands down. And this is the only reason why NBFCs are doing good when we compare it to the competitors. So they know the demand of the customers. Okay, lowest strata of the society. Competition. Healthy competition is required, and NBFCs are participating in that competition. If a particular NBFC is established in a rural area for let's say 15 years now, do you think that a bank or a bank's branch which has opened just now in let's say 1 or 2 months earlier, do you think that it can attract all those customers which are loyal to the branch or the office of NBFCs? Answer is clear, no. So competition will be increasing from the side of the branch which has just opened. Okay, they will devise certain mechanism, lower rate of interest, good customer care network, and all these things will benefit what? They will benefit the customers, the rural area individuals. Next, reaching the unbanked masses. This is unsaid that we must provide financial inclusion to everybody, and NBFCs are doing that. Okay, this is the next topic, or you can say the next role which is being played by the NBFCs. Next, complementary role. When you create a network wherein you have n number of components in a rural area, in a rural society, supposingly you have RRBs, you have commercial banks, and okay, let's not say only the commercial banks, let's diversify it further. You have public sector banks apart from the RRBs, you have private sector banks, plus certain cooperative societies are there. Along with that, some, you can say, urban cooperatives are located nearby the area, and NBFC are present in the rural areas. So do you think that this particular network which is being formed will help the customer or not? It will definitely help the customer. They have more choices. Each of them, NBFCs, will be complementing all of them. The desire, the urge to include everybody, all the individuals, in a robust mechanism for financial inclusion. This is the complementary role. They play a complementary role to the banking system by enhancing the competition and diversifying the sectors like infrastructure financing, retail financing, etc. Okay, fine. Now let's move on to the regulators. Who are the regulators? Why are we saying regulators? Plural, not singular. Regulator is RBI, but there are n number of NBFCs who are involved in such business activities, certain sectors where we require multiple regulators, like insurance companies. They will be regulated by the IRDAI. Some functions will be regulated by RBI. Certain companies will be regulated by SEBI. Fine, and so on. We have a network of regulators also. But primarily, if the question is there, it will be RBI. Okay, so regulators of NBFCs, companies that do financial business but are regulated by other regulators apart from RBI, they are given specific exemptions by the RBI that okay, you have a regulator at your end, just stick to the regulations which they are telling you. Do not miss any regulatory mechanism, any regulatory you can say findings. Companies that are required to be registered with RBI as NBFCs are found to be conducting NBFC activity, non-financial or non-banking financial activity, such as lending, investment or deposit acceptance as their principal business without seeking the registration from RBI. Then RBI has the capacity, has the power to impose penalty, fines on the respective NBFCs. So this is very, very important. You must seek registration for listing the NBFC in the regulatory framework of RBI. If you are falling in some activities like lending, investment, deposit acceptance, and that is your principal business. Okay, if the principal business is what? Agricultural activity or industrial activity, then it is not NBFC. We have seen primary. This is a very, very important keyword. Primary business, principal business. Okay, fine. Now, as we have seen, AC Shah committee and various James committee also. So all the committees ultimately gave the powers to RBI, and today when we see the regulatory framework of NBFCs, it is more or less a culmination of all those recommendations. So the amendments to the RBI Act in 1997 bestowed comprehensive powers on RBI to regulate and supervise the NBFCs. Salient features. What were the salient features? It is mandatory for the NBFCs to obtain a COR, that is certificate for registration, this registration which we were talking about, from RBI, and maintain a minimum level of net own funds. How these NOFs are panning right now, we will see in the SBR. Recurring deposit taking NBFCs to maintain a certain percentage of assets in unencumbered approved securities. Primarily, apart from G-Secs also, you have some approved securities. You can mention in your policy document, the NBFCs can mention in their policy documents that we will maintain this much percentage of our assets in these types of securities. Next, requiring all the NBFCs to create a reserve fund and to transfer a sum which is not less than 20% of their profits. This is very, very important, guys. 20% of their funds. 20% of their funds from what? Funds of profit. Okay. You must have a reserve fund based on the profit, which is minimum which is a minimum of 20% of their profits every year. Reserve fund. These things must ring some bells in your mind, that reserve, the CRR, SLR, try to correlate NBFCs with the banking institutions. Okay. Empowering RBI to prescribe policies for adherence of various norms like income recognition, accounting standards by NBFCs. Then we have some auditing formalities also. Some auditings, or you can say some audit formalities, will be regulated by RBI. RBI wants NBFCs to have a robust framework of audit. So audit in the form of internal audit, or for that matter some special audits as well. Next, the RBI prohibits NBFCs from alienating the assets. NPA management is one of the part of this point. Empowering the RBI to file winding up petitions against NBFCs. So RBI can act as a arbitrator. Arbitrator means a particular body, that is RBI, can decide in the case of dispute that who has the upper hand. That is the role of arbitrator. Okay. Now let's move on to the important topic, most important topic of this class, this lecture, this session, that is SBR. Scale-based regulatory framework, or you can say scale-based regulation. A revised regulatory framework for NBFCs. It was designed and you can say implemented, or the notification was released in October 2021. Specifically 22nd October 2021, RBI released the notification for this framework. According to this framework, the NBFCs will be categorized in 4 layers. First of all, the top layer will be empty, because according to RBI, we have certain inhibitions in defining the NBFCs which will be falling in that layer. It is pretty much new for RBI also to judge that which NBFC will fall in the top layer. So mostly, or right now though it's 100% that top layer will be empty. Why I am telling you mostly? Because after these SBR's timeline has exceeded, that is somewhere after 2026-27, RBI will sit back and talk to the various stakeholders and then decide whether we can implement something for the top layer or not. We can decide for the top layer categorization or not, but for now it is empty. Now let's jump on to the base layer. Base layer is for those NBFCs with the size of 1000 crore till, you can say not till, below 1000 crore. If the size of NBFC is below 1000 crore, it will be in the base layer. Now, if the size of NBFC is equal to 1000 crore or greater than 1000 crore, it will fall in the middle layer. And the top 10 NBFCs of our country will be falling in the layer, that is upper layer. So upper layer, top 10 NBFCs, middle layer 1000 and above, 1000 crore and above, base layer less than 1000 crore, and top layer is empty. Okay, so this is written here. And how you will categorize them? There is a 3-step formula. First, you will see the size of the NBFC, you will see which activity the NBFC is performing and what is the perceived riskiness in that particular activity. The leasing business in India, is it risky enough for NBFCs to handle? One NBFC in the insurance sector, can it handle that activity of insurance? If yes, then what is the riskiness involved in that sector? Okay, like that. So these are the 4 layers. This is very, very important. These 4 layers, a direct question can be asked. Fine. Here the same thing is written. One important fact which we must know about the upper layer, because it is the topmost layer. The top layer is empty, so you will have the topmost layer as upper layer right now. Here, according to this SBR, one important point is there, that the top 10 NBFCs will require to meet certain criterias, quantitative criteria and qualitative criteria. Now, what is the meaning of quantitative criteria? Quantitative criteria in the banking industry or the financial sector means the asset size, how big the company is. Okay, that is your quantitative area. What kind of activities you are in and subcategorization of the asset size involved in those activities, quantity. But when I talk about qualitative phenomena will be that phenomena wherein all those parameters of regulation starting from prudential norms, NPA management, NPA guidelines, your capital adequacy, all these things will be included in the quality of the asset, qualitative. Okay, so according to the SBR, when we talk about the upper layer, 70% will be what? Quantitative, and 30% parameter will be what? Qualitative. So in order to judge that what all NBFCs will come in top 10, we will require this number, 70% of the quantity, the quantitative standards, plus the score of 30% of the qualitative measures. Okay, club together, you will have the ranking of top 10 NBFCs in India. Fine. So any doubt, guys? Any doubt you have, you just ask me. Okay. Now let's move on to the main issue, the current issue, the contemporary issue, you can say that. There are certain important NBFCs, certain fields where NBFCs are involved. They are important according to RBI. First one is ICC, NBFC ICC, investment and credit. Investment and credit companies. Investment and credit NBFCs. MFI, microfinance institutions. MFIs, NBFCs. NBFC factors involved in factoring business. NBFCs involved in factoring business. So, according to RBI, one framework has been designed that what is the gliding path, how RBI plans to increase what? NOF of all the three categories of NBFCs. Right now, the NOF for ICC is 2 crore and 5 crore for MFI and factors. Specifically, 2 crore is for the Northeast region when we talk about MFIs, microfinance institutions, because there we specifically need MFIs. That is why some rebate is there. By March 31st, that is in this March only, 31st March 2025, NBFC ICC must be 5 crore. A jump of 3 crore is required according to RBI. MFI requires a jump of 2 crores. And your factors also require a jump of 2 crores. Here for Northeast region, 3 crore jump is required, and 5 crore in Northeast region must be the NOF for microfinance institutions. Okay, by what? By March 31 this year, 2025. Now, what is the ultimate aim? The ultimate goal is the NOF, net owned fund, of all the three NBFC types should be rupees 10 crore. That is the ultimate aim, which we plan to achieve by what? By March 31st, 2027. March 31, 2027. Approximately 2 years are left. So let's see whether we can achieve that or not. Okay, 10 crore, March 31, 2027. Very, very important. Fine. Now let's see NPA classification. Currently, when we talk about NBFCs, what are the NPA norms? What are the NPA norms? If a particular account is overdue for a period of more than 120 days, then you will say that yes, NPA has occurred. The asset is a non-performing one, NPA. Earlier, till last year only, March 31, 2024, it was greater than 150 years. If the account is overdue for more than 150 days, then we can say that yes, NPA is there. Currently, it is this timeline, that is greater than 120 days of overdue account will be categorized as NPA. Ultimately, the aim is this, like the commercial banks, if the account is overdue for more than 90 days, we will say that yes, it is an NPA account. So by March 31, 2026. So NOF has a time limit for 2027, and NPA for 2026. After 2027 only, various economists feel that we will know for sure that what will happen in the top layer of the mechanism, which is currently empty. Okay, so yes, this is a point which we must know. Who knows that by 2027 what will happen to the Indian economy, but yes, that's the agenda. Okay guys, so this was it from my side. If you have any doubt, any kind of doubt, just feel free to ask in the chat section if you are watching live, or for that matter in the comment section if you are watching this in the recorded format. Okay, so fine. I hope that you are able to gauge the importance of this unit, that is NBFC, a very interesting unit if you see with the lens of evolution, if you see with the lens of RBI regulatory mechanism, you will learn new things. So that's why I am saying that it is one of the interesting unit if you try to correlate the evolution with the actual things which were happening, the events which were happening via the evolution of NBFCs, during the evolution of NBFCs. So on that note, I would like to highlight the offerings which we have for all of you. We have launched JAIIB Mahapack 2.0, the product for our students who will be enrolled in Officers Adda 247. What are the features? The primary features are live classes are provided, timely classes. We have recorded format of all those live classes. The videos in the recorded format will also be provided. We have quizzes, we have ebooks, we have full-length mock tests. We have developed a mechanism wherein we interact with our students in real time. With the help of AI, with the help of AI Doubt Guru, we have accomplished that thing also. Plus, we have certain other mechanisms also. If you have seen or if you have seen the recorded videos also, we try to interact a lot. And if you know your colleagues who have enrolled in this course, in the courses which we are providing, we are offering, you can also cross verify with them. We tend to interact with students a lot, with the participants a lot, because the only motive for these classes is that after attending these class, you should not have any kind of doubt whatsoever in the topic which we have discussed in the class. So highly recommended for all of you who are just beginners or they do not know where is the direction of their exam preparation. They do not see any progress in the exam preparation. And definitely this is the course which you must enroll in. And to have a cherry on the cake, we have also come up with one increment Mahapack, wherein you will get the JAIIB Mahapack 2.0 along with one box will be provided. It will be delivered to your doorsteps. And what is included in that box? A very premium packaging, first of all, I would say, because I have the opportunity to see the box. In that box, you will get the 4 books of each subjects, IE IFS, AFM, PPB and RBWM, which will have quality questions. So the bridge between topic coverage and solving mock tests will be fulfilled by these books. You have practice questions. You can practice before going online and doing the mock tests. Secondly, we also have planner for all of you, so that you need not to do anything. Just tick on the topic which is mentioned. We have mentioned one box also, one dialog box is also there. Just you need to tick that box and feel the sense of accomplishment that yes, I have completed the task. the topic, subtopic. Also, we have formula sheets for all the 4 subjects. Along with that, we have various merchandise also. We have a 247 diary for all of you as a token of appreciation from our side that you are associated with us. Plus, we have a bottle. Plus, we have pen. Plus, the most important point which I want to highlight in the goodies, we have personalized messages from all the faculties for our dear students, so that in the need, if they need any motivation and in the need of motivation, whenever they feel demotivated, they can just go through those cards, those special messages, and feel motivated again. Because trust me when I say this, after coming from the office, it's really hard to study. And if you are doing that, consistency matters. And just in case you are unable to maintain that consistency, just flip through those flashcards. You will surely get the dose of motivation. So my recommendation is that you must join this course. And now is the opportune time for that, because we have Republic Day tomorrow. And what I want from all of you is that the Republic Day 2026 must be celebrated by all of you as a JAIIB qualified banker. That's what we feel, the entire team feel, and wishes. Okay, so if you want to accomplish that thing in the next year, I would highly recommend that you must pay attention to the resources which we are providing. Exam relevant resources, quality content is there. So whichever question you feel is there in your head, in your mind, you can just ask me right now. And whatever resource you want, whatever help you want from all of us, we are here to help you. Okay. So first of all, I would also like to congratulate all of you in advance for the Republic Day. Many, many congratulations to all of you. We as a nation must grow, and you guys, the bankers, will be one of the important stakeholder of this growth story, the economic growth story of our country. So heartiest congratulations, best wishes for your growth. Keep on growing, keep on studying hard, and do not forget to revise whatever you are studying. Okay, when we come to the sale, which is live today also, since 2-3 days it is live on all the courses for JAIIB and CAB. Flat 80 plus 1% discount is there with double validity. You are paying for 6 months. You are getting the resources, the materials for 12 months. Okay, so that's the USP of our platform, that we provide hand holding in every format. Okay, whichever is required. So you can use the coupon code Y1003 to avail the maximum discount. And now let's move on to the query which most of you have, that how to enroll in the course. This is the course I was talking about. Just go to the website, our website, adda247.com. Click on this tab, JAIIB CAB Mahapack. Just click on this JAIIB increment box Mahapack and click on buy now. You can enter the coupon code which I just told you, that is Y1003. Click on apply and the maximum discount will be reflected. Okay, so this is the code. If you need special discount or maximum discount, I would say, you can apply this code. Fine. So any doubt, guys, any kind of doubt you have, just ask me. I'm here in front of you. Okay. So for all of you who are watching this session in a recorded format, do comment in the comment section that where do you feel your preparation is going, plus what do you want from the sessions which we are providing, whether we are able to fulfill the need which you have or not. Your feedback matters. Along with that, do not forget to share, subscribe, and hit the like button also, so that we have the constant motivation as well. Okay, so on that note, we'll meet in the next class, next session, with the same zeal, same vigor. So do not forget to join us again on Tuesday. Okay.